He's not alone with his concerns, and these changes are hitting lower-income consumers, those with credit scores below 620, the hardest. The Fed's interest rate hikes are squeezing them out of the market.
What we're seeing is another manifestation of what we saw during the subprime crisis, which is that lower-income people lost their homes.
What we are seeing is another manifestation of what we saw during the subprime crisis. Subprime. Of a loan made to a borrower with a poor credit rating, usually at a high rate of interest. The crisis rooted in real estate and subprime lending.
And lower income people are having difficulty getting cars, getting mortgages, and they're also at higher risk of default.
And lower income people are having difficulty getting cars, getting mortgages, and they are also at higher risk of default. Default. If a person, company, or country defaults on something that they have legally agreed to do, such as paying some money or doing a piece of work before a particular time, they fail to do it. The credit card business is down, and more borrowers are defaulting on loans.
Being priced out of the market is just one reason Americans have a bone to pick with the auto loan industry.
Being priced out of the market is just one reason Americans have a bone to pick with the auto loan industry. A bone to pick means to want to talk to someone about something annoying they have done. I have a bone to pick with you about the unfinished project.
Besides the notoriously unpleasant car buying experience, there's also been more complaints and lawsuits related to alleged discriminatory and illegal practices by auto lenders than we have time to get into.
A lot of the auto salespeople that I've seen personally, not to say all, but definitely a lot of them, are doing it very much in a rush way in order to get a high markup on a car, in order to get a great commission.
But definitely a lot of them are doing it very much in a rush way in order to get a high markup on a car. Markup. A markup is an increase in the price of something, for example, the difference between its cost and the price that it is sold for. We all know that most wine in restaurants is overpriced. A markup of 200% on cost is considered normal.
But not with the interests of the buyer, not with their financial livelihood, and not with their family in mind.
Remember that indirect lending example I gave you earlier with Subaru and Chase? The bank, or in that example Chase, provides an interest rate and loan terms, and then the dealer, or Subaru, presents you with their interest rate and terms. That's often with the markup.
The consumer never sees how much the finance company has said is the minimum interest rate and loan term that they will accept. Let's say, for example, Toyota Finance says that they want the minimum interest rate to be 7%. The dealer can bump it up to 9%, and the consumer never knows about that transaction. It violates all of our norms about fairness and about the way markets work.
It's a convenience the dealer is providing, offering a service by arranging financing. That markup becomes profit for the dealer and is sometimes shared with the lender.
Chase and many financial institutions do put limits on how much of a premium a dealer can add to the rate that we offer. Putting limits ensures consistency of experience across a variety of distributors.
Chase Auto did not provide us with what its current caps are. Caps on markups vary based on state and lender, but are typically around 2.5 percentage points. Lack of transparency is just one, but a common reason some consumers feel they're being treated unfairly. One of the more recent controversies was this one. The Massachusetts Attorney General reached a $7.6 million settlement with Toyota Motor Credit Corporation to resolve allegations of illegal auto loan collection practices. The lawsuit claims Toyota failed to give certain consumers sufficient information about the calculation methods for deficiencies left on their auto loans after their cars were repossessed.
I can't comment on that settlement. We stand firmly that, our practices are very fair. To be specific, settlements and fines, I really can't comment because of the specificity of the state allegations and what might be behind it.
Back in 2016, a different settlement. That time, for $21.9 million to settle allegations that Toyota discriminated against Black and Asian borrowers by charging them higher rates than white borrowers.
Toyota is not alone. I think probably all the major car manufacturers have been hit with lawsuits like this because of the discretionary decision making when it comes to the markups.
Toyota wouldn't comment on that settlement either, or this report, spanning the entire industry by a former senior economist at the Federal Reserve Bank of Chicago. It claims Black, Hispanic, and Asian borrowers often pay hundreds and sometimes thousands of extra dollars in loan payments relative to their white counterparts. Do you have any insight into why that might be?
No, that is something I cannot comment on. All of our risk-based pricing is based off of FICO score and creditworthiness of the customer. We don't even collect that type of data.
That report is not nearly the only one with such claims. According to this research paper, minority borrowers pay 70 basis point higher interest rates, but default less than non-minorities. These researchers say each year more than 80,000 minorities are unable to get loans that they would have been approved for if they were white.
Whenever people have subjective decision making, that's where the lack of transparency is very problematic.
We spend a lot of time making sure that we understand and are providing affordable lending products to all consumers, regardless of their background.
A class action lawsuit was filed in 2017, alleging Chase Auto violated the Fair Debt Collection Practices Act and state law.
A class action lawsuit was filed in 2017. Class action. A class action is a legal case brought by a group of people rather than an individual. In addition, there have been a number of class action lawsuits filed against the company as well.
By illegally repossessing consumers' vehicles from April 2013 to 2018. In 2018, Chase Auto, its parent company JP Morgan Chase, and debt collector Repossessors Incorporated agreed to pay $3.25 million to settle the case. What has Chase Auto done since then, and have business operations changed to prevent future allegations?
We undergo a variety of tests of our systems and processes to ensure that they are compliant with all rules and regulations. And there have been a series of exams and reviews of our process, and we feel confident that we are compliant with applicable law and regulations.
For the first time in more than a decade, in 2022, the FTC proposed a rule addressing unfair and deceptive financing practices by auto dealers.
FTC. Federal Trade Commission. FTC is the U.S. government organization that is responsible for making sure that there is fair competition in business.
The proposed measures include banning bait and switch claims, fraudulent junk fees, surprise junk fees, and requiring full upfront disclosure of costs and conditions.
I've dealt with predatory lending. Multiple members of my family have also dealt with predatory lending in some very sketchy situations.
I have dealt with predatory lending. Predatory. Predatory people or organizations are eager to gain something out of someone else's weakness or suffering. People will not set up new businesses while they are frightened by the predatory behavior of the banks.
And it's really in our best interest to have some rules in place to make sure that these unscrupulous auto lenders aren't taking advantage of people.
And it is really in our best interest to have some rules in place to make sure that these unscrupulous auto lenders are not taking advantage of people. Unscrupulous. If you describe a person as unscrupulous, you are critical of the fact that they are prepared to act in a dishonest or immoral way in order to get what they want. These kids are being exploited by very unscrupulous people.
But in July 2023, the U.S. House Appropriations Committee backed a government spending bill containing language that blocks the FTC from implementing its proposed new rules. So, what does that mean for consumers? It means new legislation is probably not around the corner.
It means new legislation is probably not around the corner. Around the corner means not far away or going to happen soon. The exam is just around the corner, so I need to start studying.
In the meantime, consumer advocates say more programs are needed to protect Americans buying cars, and that increasing transparency is key.
My mother always knew how much bananas cost at every grocery store and went to the store that had the cheapest price. When it comes to cars, we don't have that ability.
Do you believe a consumer should be able to see the rate directly from Chase, regardless of whether or not they're, getting pre-approved at home prior to going to the dealership, or if they're sitting in the dealership and that's the first time that they're trying to get an auto loan?
Yes, I think that transparency is critical. And so if a consumer goes to chase.com, they can see the rate, they can see the terms, and they should be able to see the rates and the term at the dealership or whatever they get their financial loan from.
Until we see changes in the industry, Americans need to look out for themselves. Before getting an auto loan, experts recommend shopping around. Check your credit score, get pre-approved online, go to your local credit union and bank, and find out what types of deals you might be able to get before signing anything.
Right now, we're finding that the lowest interest rates are with the credit unions. Average rates within credit unions are closer to the 6% range, whereas the banks are closer to 7 and 8%.
We now have digital marketplaces online. There's a wide range of resources now that are available to help customers understand the competitiveness of the interest rates, the terms that they're getting. Arm yourself with the best information possible.
In 2020, Toyota launched SmartPath, a digital retail tool that lets customers shop for cars and apply for financing online.
This concept of living room to showroom, so that when customers and guests are online researching what kind of vehicle they want, they can have a similar and transparent process.
If you have the means, drive to a second, third, or maybe fourth dealer to compare rates and terms. And stay away from buy here, pay here dealers. They typically offer the highest interest rates, sometimes up to 20%. Do your research, ask questions, and don't give up, even if it's been a long, exhausting, and mentally draining day. We all know the feeling of not wanting to see one more number, but don't let that push you to sign on the dotted line if you're not ready. Tell the dealer you need more time, and you'll come back. Finally, vote.
There are tremendous problems and tremendous solutions. And those solutions are only going to happen if the politicians who are making decisions about federal law in particular are willing to take consumers into account. And until we can get politicians to commit to protecting consumers, we're not going to have solutions.